So as you can see, a structured strategy is critical to long-term success in options trading. Throughout this course, I've tried to utilize my years of experience to create a playbook for potential success. In this section, we'll tie it all together and highlight how probabilities and analysis factor into your overall strategy. In this section, you will learn how to plan how to make use of probabilities and utilize fundamental sentiment and technical analysis. As we look to improve your edge, I want you to think of delta at the beginning. And delta, I want you to think of as the likelihood of expiring in the money, okay? And then also think of delta, that snapshot, it's the market's expectation at that moment. So the market is basically saying that this is the probability that this option is going to expire in the money. And then obviously, as we're talking about structuring multi-legged options, each option has its own delta. That's very important. You have to assess each option leg. So let's go ahead and look at our graphics again of calls and puts. Now here, let's go ahead and look at puts. Now, as the put strike prices are increasing, you'll notice that the delta is also increasing, which makes a lot of sense, right? Because if you own a put, you have the right to sell stock. The higher I can sell that stock, the more likely I'm able to be in the money at expiration. So again, the reason I'm telling you this is because everything is all about probabilities for me when I'm trading options. So lower probability options, I'm not really that interested in. I want to stack the odds in my favor. And so actually looking at the delta from the onset makes a lot of sense. The same thing can be said for calls. So again, as call strike prices decrease, the delta is increasing, right? Owning a call, I have the right to buy stock. If I can buy that stock lower, it seems to reason that at expiration, I'll be able to most likely have a better chance of being in the money. So the reason, again, that I'm telling you this is because I want to think about everything from the lens of probability. And so I don't want to be going out buying calls that are 10 delta all the time, right? Because that's a 10% probability that they're going to expire in the money. Now again, I can't stress enough how important time decay is when trading options. So remember, net debits, premium is a hurdle at entry. So the bottom line is time is working against you. When you're selling options, net credit, premium is a buffer at entry. So the bottom line is time works in your favor. So let's go ahead and look at this chart one more time and realize that this chart that we're seeing, this acceleration to zero of time decay, this is helping the seller of options. This is hurting the buyer of options.